Good morning, all. I'm just going to take you through how to use and all the settings for the new Volatility Master software. It isn't necessarily a lot different to the older version, but there are enough differences to matter. So like any EA, you just need to install it in the experts folder and drag it onto the screen. I'm just going to put it on this chart to start with. Now the settings for it, the default settings are the basic starting, roughly settings that you want to use for the US 30 Open. Okay. So daily profit target, it's exactly what it sounds like. Now this is my $6,000 funded next prop account. So when you start, if you've got a same size account, when you start, you've just got to make 8% profit. No points, no benefit at all of making any more than 8% profit. So I'm going to put in 480, which is 8% of my $6,000 account. I might just add an extra couple of dollars just to make sure I definitely make 480. I don't want to make $479.98 or anything, because I wouldn't pass. Just to cover myself. So that's all that is. Daily equity protection is so, and this is working off the equity of your account. So it doesn't matter how or when or why the trades were taken out, what pairs of trades were taken out on. It's going to calculate that in the daily equity protection. And for example, on my $6,000 account, I'm not allowed to exceed a 5% loss on any given day. So at a $6,000 account, that is $300. But that would be, you might end up, by the time it closed all the trades and everything for you, you might go over by a few cents or a dollar or two. So you wouldn't want to put 300 in. 470, sorry, 270 would be 4.5%. So you wouldn't want to lose any more than that. If you got up to 4.5%, $270, it's going to close all of those trades, and it wouldn't trade for the rest of the day. So that's going to keep you safe so that you don't breach the maximum drawdown rule for the day, and that's what you need to make in order to pass the first phase. So now I'm going to go through the settings. Take profit. As I said, that is set to sort of suit the US 30 Open, but depending on your broker and how they're calculating their pips, it might need to be 2,500 other than 25,000. Okay, it'll be very, very obvious. I'll show you here shortly. But other than that, take profit pips is exactly what it sounds like, except that the points, not pips. I'm still fine-tuning this EA. So that's pretty obvious. Trailing stop loss. Depends, it's variable depending on, how you want to trade it. I've found that the 7,000 back tests the best, but from a day-to-day standpoint, 5,000 is quite often preferable. And the difference is usually how volatile the open is. Sometimes it's not very volatile, sometimes it's more volatile. On the more volatile ones, the potential of profit is larger, but you also need a larger figure here for the trailing stop loss. But yeah, from my back testing, 7,000 does work better. But sometimes if I am awake for the open and I see that it's not very volatile, I will reduce, and sometimes even more than this, reduce the actual trailing stop. But that's totally up to you. Everyone trades different. Stop loss in pips isn't exactly what it initially sounds like. I'm going to refer to my chart to explain what I mean. Okay, so if, I had it set to trade now and it dropped and it's broke below. So this is calculating the top and bottom of the 1 minute range. And if it broke below, it would place a sell order. It would also place a stop loss just above the top of the range. So it's always placing the stop loss based off market structure. And in this case, I have it set to 500 points. So what that means is that it's going to place the stop loss 500 points above the top of the range, which would be right about there. So nice and close still. It might be a little easier if I made the chart a bit bigger. Yeah, so that's the top of the range. It would place it, the stop loss 500 points, which is just there. That's where the stop loss would go. Maximum stop loss. So what that setting does is it says that it's always going to want to place the stop loss just above or below the most recent 1 minute market structure, unless it's going to be more than, in this case, maximum stop loss of 10,000 points. So if I measure from where that trade would get taken out to where the stop loss would go, in this case, that's 3,748-ish points. Okay, so that would be fine. But if this top of the range was too far up here, so if the top of the range was right up here, that's that's 12,000 points. If that was the case, it would still place the stop loss at 10,000 points. So that's just it doesn't often happen, but that's just a little insurance to make sure it's not going to place the stop loss too far away. Otherwise, that's not really where you want it, but also it could mean a much larger loss could be taken, et cetera, et cetera. So that's how the maximum stop loss setting works and calculates. Order size. So I just have that, or as default, I have that set at the minimum, just so there's no issues with people accidentally taking out larger lot sizes than they should. But that you'll obviously just have to adjust that based off your account balance and the way your broker calculates the lot size, so the size of their contracts and all of that. Risk percentage. Now, this one thing to remember, the risk percentage doesn't on its own change your lot size. Okay, the risk percentage is just going to give you a figure which you have to enter anyway. So let's say I bumped this up. I wanted to risk 2% per trade. Just wait for that to calculate. So now it's changed to 2 instead of 1. Lot size for a 2% risk is 1.159 lots. You then need to go back in and change your lot size to 1.59. Now, what that means is if the stop loss was at the maximum of 10,000 points and you hit it, you would be risking 1.59%. Now, most of the time, your stop loss is going to be closer than 10,000 points. So if you have it set to 2% risk, that's the absolute maximum risk that you would be accruing per trade. most of the time it's going to be less than that. So you could set the lot size higher, but then you need to keep an eye on where that stop loss was going just to make sure. Totally up to you, but I've just got these settings so that people can run this without monitoring it, particularly because for me here in Australia, the US 30 Open and a lot of the USD red folder events are occurring late at night. Magic number, don't worry about what that is. It's just what the software uses to identify its own trades as opposed to trades from, manual trades or another EA. Profit lock and profit lock activate. They're just the same as the profit locks on any of my EAs. Simply once the trade gets into 4,000, in this case, 4,000 points of profit, it's going to move the stop loss to a positive 1,000 points. So you're going to lock in 1,000 points of profit. Minutes per trade. We've got two different entry methods available on this EA. I tend to set it at 5 on the entry that I'm talking about at the moment. So there's two entries. There's two different entry types. There's one where if it breaks above or below the 1 minute range, it trades that way. The other one is the old and original sort of entry method, which is like this one. So you can see we've got one candle here, and then this next little candle is sort of contained within the boundaries of that one. So it's, the top of the little candle's wick is below the top of this candle's wick, and the bottom of this candle is above the bottom of this candle. So it's contained within, which is just what we call an inside bar. And then when the market breaks below it, or, if it breaks above or below the inside bar, it'll trade that way. So in this case, it would have taken out a trade here and would have went into profit for a while, and now it would be back to break even. So that's the inside bar method. The 1 minute range breakout is the other method. So with the 1 minute range breakout, I tend to like about 5 minutes per trade. Max open at once, so that's going to be totally up to you. I don't think it's not super important with this version of the software, simply because if like it'll take out that initial the first trade when it breaks above or below that 1 minute range, but then it won't take out the second trade until the first trade's profit lock's kicked in. So not until it's a no risk trade, and won't take out a third trade unless the first two are risk free. And in my back testing, if the software manages to open up 3 trades that then go in your favor, and you're doing a 3% risk per trade, that tends to be enough for you to hit your profit target of 8% anyway. So having any more than 4, if you're risking 3% per trade, 3 is enough. It's you can, in my back testing, sometimes you'll get 4. It's very rare that it'll ever manage to stack 5 trades anyway. And if you're doing 3% risk per trade, you've well and truly hit your 8% profit target before you get that many trades in line anyway. And in my back testing, not on US 30 so much, but recently I've done some back testing on the NFP event that occurs once a month. And, even just sort of stacking 4 trades, risking 3% per trade, I was able to take up to 20% profit from one news event. That's just in back testing. Okay, then we have all the start times. So we have separate start and end times for every day of the week. So Sunday and Saturday, it's going to be extremely rare that you use them unless you're doing a little bit of crypto trading, but I whacked them in there anyway. So we've got Monday start time, Monday end time. This is in minutes. Okay, this is in minutes. Minutes from the start of the trading day. The start of the trading day is 000 hours market watch time. So right at the moment, everybody, no matter where you are in the world, your market watch time says 02:09:40. Yours won't at the moment because you're watching this as a recording, but you know what I mean. So to calculate the start time, if I wanted this software to start trading right now, I would need to put in, say, 2 hours is 120 minutes. You got that? 2 hours, 60 minutes an hour. So that's 120 minutes plus 30, plus 10. You know, so 2 hours is 120 minutes plus 10 minutes. So this particular time here is 130 minutes. So if I wanted this software to start trading now, I would type in 130. I'll just prove it. At the moment, it says not correct time. Oh, it's not Monday. Today is Thursday, so I need to come down to Thursday start time and type in 1:30 and click OK. And there you go, correct time. So that's how the time parameters here work. And 1,000 minutes is 10 minutes after the US 30 opens, which for me here in Queensland is 11:30 at night. And my end time is I'm just allowing it to add new trades for 60 minutes after the news event. Now, this is going to be, obviously, that's the time I would like the software to start if I'm using the 1 minute breakout. Okay, if I'm using the inside bar breakout method, I would take 9 minutes off that. So this is with the 1 minute breakout, I'm having it start 10 minutes after the open. With the inside bar entry method, I just wanted to start 1 minute after. But the end time, that's a bit of a personal choice, and the optimal end time is going to vary from day to day and how well the market starts to trend after and all that. But 1 hour, 60 minutes after is a good average. With other red folder news events, sometimes more, like with NFP, 3 or 4 hours after is good, you know. So instead of 60, we'd need an extra 240 or 180 on there, just because that's an event that does trend quite significantly for several hours after the event occurs. So that's how long after is going to vary depending on the event you're trading as well. All right, so that is all the start and end times. Hopefully that makes sense to you. We've got 2 partial closes. So it simply means that depending on your lot size, if you're trading a small lot size, then you won't be able to use the partial closes because in this case, when the trade gets into 8,000 points of profit, it's going to close out 0.1. Now, obviously, if your trade was smaller than that to start with, it's not going to be able to. You can leave it like this. It's just not going to be able to execute it because you're trying to close more than you've got. And partial close too is just exactly the same. after it's done the first one, then it'll look to, when it gets into 15,000 points of profit, it'll close out another portion of the trade. But, you know, if you had a 1.0 lot size trade to start with, when it gets to 8,000 points, it's going to close that out. So now your trade's only 0.9. And then when it comes to here, it closes out another 0.1. Now your trade displayed on the chart will only be 0.8. But you will have some profit locked in your trading history. These two, this is where you can select between the two different entry methods. So I've got it set to use the 1 minute range breakout to true. And it's nice and easy to change. You just double click the drop down and select. You can have it set to 2, both of them to true. And then the initial trade will just occur whichever one of these criteria is met first. So if you get an inside bar breakout first, it will take out the initial trade. And while ever there's an initial trade in play, then, you know, this one won't work then. And then the stack trades, the extra trades added on after that, will always work off the 1 minute breakout, and only once the initial trade is in profit. So you can use both at once if you want. Now these settings here determine, or breakout determines how far past. So, you know, we've got the top and the bottom of the 1 minute range. The breakout is how far past that line, so either the red or the blue line, so how far past it has to go before it takes out the trade. So in this case, I've got 1,500 points that have to come down to about here. It won't trade, bang, this is where it'll start trading. Support and resistance rest buffer. So support and resistance buffer, that stands for. That helps in the calculations of where the top and the bottom of the range is calculated and displayed. It's a little hard to explain if you haven't coded stuff up yourself exactly what that works, but because this is a you'll see these same settings in CA breakout. But this one's set at 2,000, but this is on US 30. Let's say if I was trading Euro US, I might have that set at just 40 or 50, for example. But we'll get into that more. So I will make some setting. I haven't got templates or anything made up for this one, but I will leave the default settings that you'll get with the software to suit US 30. Depending on your broker, though, all of these distances, so the breakout, the support and resistance, the second peak preference, the mitigation. If you're a broker that calculates a pip smaller, you'll have to take a 0 off all of them. So the ones you would have to change if your broker is different to this one would be anything that is a pip distance, which is the mitigation, the second peak preference, the support and resistance buffer, the breakout, the partial close distances, the profit locked distances, the max stop loss pips, trailing stop, and take profit. They're all the pip distance ones. So they're the ones you would have to take the 0 off if you're a broker that calculates it on the smaller side. So other than that, let me see, the shoulder and the candles, I don't change them. I'll leave them in here as a user definable at the moment, but I wouldn't change those. They can stay the same no matter what pair you're trading. Mitigation is all to do with the stacked trades. So you've actually got another choice here that I missed. Where was that? Anyway, so what mitigation is this is just on the extra stack trade, not the initial trade. But when it breaks below, so when the market got to here, it would place a trade, but it would place a limit order, in this case, 300 points before the bottom of the range. It's got to break below the range, but then it's putting a limit order here, meaning it's going to wait for the market to move back and activate it, so to move back and mitigate it. So that'll give you a better entry point than if it placed it here, but it is at the risk of sometimes it doesn't retrace and mitigate. So the larger you make this number, the less chance there is of moving back and activating it. So sometimes you'll miss out on the trade, but when you get it, it's going to be in a much better position, a much preferable entry point. So you do have two options for those stack trades. When it breaks below, it can just place a sell order right then and there, or you can have it place the limit order up a bit higher, depending on your mitigation figure. And you just select that one here. So use limit orders for stack trades, true. If you wanted to just place a buy order, or sorry, a sell order as soon as it breaks out, then you can just change this one, change it to false. And guys, that's all of the settings that we have there at the moment. I don't think there's anything else too relevant at the moment. It's displaying the target. So this is my daily profit goal. I want to make $482 because that was just over 8%. Once you have a trade open, you'll see this figure fluctuate depending on whether the trade's going into profit or loss. But essentially, during the course of the day, you'll see this figure count down. When it gets to zero, it will mean you've made $482. And as soon as it does get, below zero, it's going to close any open trades. And it's going to come up here in red writing saying target hit, meaning you've hit your target. And if it was a proper count and it was 8% target, then you're done. You've passed the first phase. Now, what I would do is if I had this target, but the first day I just made 2%, then I would change my daily profit target. I would reduce that figure by 2% because I want this figure with proper count specifically. I want this figure to always be what I need to make in order to pass the proper count. So if you make some profit the first day, you obviously got to make less profit the second day in order to pass. So I would reduce that profit goal figure to suit. The other thing that can happen here is if your trade goes into drawdown, this figure will increase. If this figure increases by your daily equity protection amount, so if it increases by 270 in this case, which will take you up to about 750, then it's going to close all your open trades. You're going to take that loss, and it's going to come up here saying EP hit, so EP for equity protection hit, and then it won't trade for the rest of the day. At the start of each trading day, it's going to reset your target and clear any target hits or EP hits there are, and it will start trading again for you. All right, that's about it as far as the new Volatility Master and settings go, guys. Have a good day.